Assalamualaikum and hi everyone. My name is Muhammad Zulhini bin Muhammad Kamil. My matrix number is 2024851618. Today I will explain about MFRS Act. The core idea of MFRS Act is based on the management approach model. This means that the reporting of operating segments is prepared according to how management actually views and manage the business. In simple words, the operating segments of a company are the parts of divisions whose results are regularly reviewed by the chief operating decision maker. Entities are required to disclose certain information about each segment. This includes the revenues, profit or loss, assets, liabilities, and measurement policies. The CODM is actually a function, not necessarily a person. This means that it doesn't have to be one specific individual with a title. Instead, it's referred to the role or group that is responsible for making key decisions about how resources are allocated and how performance is assessed within the company. For example, the CODM could be the CEO, the executive committee, or even the senior of team management. The CODM is for Powerhood, the CEO as the chief operating of decision making that review the group operation in quarterly basis. And while CIMB, the group executive committee, is the CODM that allocate resources and assess the performance of operating segment of the company. So here I have an example from CIMB Group interim report for 30th June 2025. This table shows the segmental reporting of the company. It's basically how CIMB divides its business into different business segments. And you can see here there are a few main segments such as consumer banking, commercial banking, wholesale banking, and CIMB digital assets and group funding. Each segment is report its own figures like net interest income, profit or loss, and total asset. This will help the management to assess which segment is performing well and where the resources should be allocated. After that, there is an example from the Power Interim Report for the 30th June 2025. This table shows the segmented reporting of the company. It's basically also how Power divides its business into different geographical segments, different with CIMB. And you can see here there are a few main segments such as Malaysia and overseas that consist of the Middle East and others. Each segment is report its own comparison figures between individuals and cumulative financial periods. This also helps the management to assess which segment is performing well and where the resources should be allocated. The Middle East and others. Each segment is report its own comparison figures between individuals and cumulative financial periods. This also helps the management to assess which segment is performing well and where the resources should be allocated. The Middle East and others. Each segment is report its own comparison figures between individuals and cumulative. That's all from me. Thank you.
Hi everyone, I'm Nurmaizatul Najiha binti Abdul Rahim. Today, I will be presenting on the benefits of segmental reporting under MFRS 8 using CIMB Bank and Power Road as our example. Hi, let me begin with CIMB Bank. The first benefit of segmental reporting is greater transparency. Under MFRS 8, companies are required to report financial information based on how management actually monitors the business. CIMB follows this by dividing its operation into 4 clear segments, which are consumers, commercial, wholesales, and digital asset and group funding. For the period ended June 2025, wholesale banking recorded 1.47 billion ringgit in income, while consumer banking generated 1.19 billion ringgit. When this information is separated by segment, investors can immediately see which areas contribute the most, which areas are stable, and which one may carry higher risk. This level of visibility boosts confidence because stakeholders are not left guessing where the bank is performing well. The second benefit is better decision making. CIMB does not only report revenue per segment, but also assets and liabilities. For example, the wholesale segment holds approximately 270 billion ringgit in asset, while the consumer segment holds around 270 billion ringgit. When management has this breakdown, they can evaluate the scale and efficiency of each division. It helps them decide where to invest more resources, which operation should be expanded, and which one may need restructuring. For investors, this helps them assess the bank's strength in different business areas instead of relying on one combined numbers. Now, let's move on to Power Root. The first benefit of segmental reporting here is that it provides a clear market performance insight. Power Root breaks down its revenue into Malaysia and overseas markets. For the latest reporting period, Malaysia contributed 65.4 million ringgit in revenue, while overseas contribute 27.9 million ringgit. This helps stakeholders understand where the company is performing strongly and which regions may require more marketing, distribution, or product strategy adjustment. The next benefit concern segment profitability for better decision making. Power Root report profit and loss for each segment, and the numbers tell a very clear story. The Malaysia segment earned 9.29 million ringgit, overseas earned 1.82 million ringgit, while other entities recorded a loss of 1.9 million ringgit. With this information, management can assess why certain segments perform better than others. They can boost investment in high profit areas and investigate the reason behind the losses in the others entity segment. This leads to more informed and strategic management decisions. Now, let's move on to Power Root. The first benefit of segmental reporting here is that it provides a clear market performance insight. Power Root breaks down its revenue into Malaysia and overseas markets. For the latest reporting period, Malaysia contributed 65.4 million ringgit in revenue, while overseas contribute 27.9 million ringgit. This helps stakeholders understand where the company is performing strongly and which regions may require more marketing, distribution. In conclusion, segmental reporting under MFRS 8 is extremely valuable because it provides detailed insight into how each business segment performs. Both CIMB and Power Root shows that when companies present transparent and structured segment information, stakeholders are better equipped to understand profitability, evaluate risks, and make smarter decisions. That's all from me. Thank you.
Hi, Assalamualaikum. My name is Adam Chris bin Ahmad Rushdi. Now we will talk about MFRS 134, Interim Financial Reporting. So what is Interim Financial Reporting? By definition, Interim Financial Reporting is a Malaysian financial reporting based on IAS 34 that provides guidelines for preparing and presenting financial statement for interim periods, example given quarterly reports. So what it is for? So the objective is to ensure that entities' interim financial report provides an update on the latest complete set of annual financial statement, focusing on new activities, events, circumstances that have occurred during the interim period. Now we will take a look at significant events of MFRS 134 from Power Root Berhad. The first one is share buyback of 34 million shares. The company repurchased its own shares from the open market for Rm 46.6 million and held them as treasury shares. This affects equity and cash flow, so it qualifies as a significant event to disclose in interim financial statement. The second one is the incorporation of new subsidiary in UAE. Power Root incorporated PR Food Trading in Jebel Ali Free Zone with 97% ownership, a significant event that affects the group structure and potential revenue streams must be disclosed in the financial statements. Now we will take
Assalamualaikum and hi everyone. My name is Muhammad Irfan and I will continue presentation by identifying the interim reporting period for financial statement for both current and comparative interim period. For your information, this company year ended is on 31st March every year. Assalamualaikum and hi everyone. My name is Muhammad Irfan and I will continue presentation by identifying the interim reporting period for financial statement for both current and comparative interim period. For your information, this company year ended is on 31st March every year. Assalamualaikum and hi everyone. My name is Muhammad Irfan and I will continue presentation by identifying the interim reporting period for financial statement for both current and comparative interim period. For your information, this company year ended is on 31st March every year. Assalamualaikum and hi everyone. Okay, let's move to the first financial statement, that is statement of profit or loss and other comprehensive income period of 3 months. For current interim period starting from 1st April 2025 until 30 June 2025, and for comparative period starting from 1st April 2024 until 30 June 2024. Revenue were decreased by 11,576,000 and profit were increased by 36,000. Okay, let's move to the first financial statement, that is statement of profit or loss and other comprehensive income period of 3 months. For current interim period starting from 1st April 2025 until 30 June 2025. Okay, next we move to the second financial statement, that is statement of financial position. And for current period as at 30 June 2025 and for comparative period as at 31st March 2025, total asset and total equity plus liability is increased by 6,411,000. Next, for the third financial statement is statement of changes in equity, also for 3 months, and for the current interim period begin from 1st April 2025 until 30 June 2025, and the four comparative period starting from 1st April 2024 until 30 June 2024. Next, last but not least is statement of cash and cash equivalent were decreased by 11 million 576,000 and profit were increased by 36,000. Okay, next we move to the second financial statement, that is statement of financial position. And for current interim period as at 30 June 2025 and for comparative period starting from 1st April 2024 until 30 June 2024. Next is statement of cash flow period of 3 months. For current interim period starting from 1st April 2025 until 30 June 2025, and for comparative periods starting from 1st April 2025 and until 30 June 2025. And cash and cash equivalent were decreased on this current period due to significant changes in working capital. Last but not least